Hello guys and welcome to our 155th edition of the Trading Opportunities webinar. This is Nirav and let's get started with a very quick introduction before we actually start off with the discussion of our charts and analysis. Looks like the chat is there. Can you hear me and also see the shared screen? Just let me know. Hello Dawood, hello Mohammed. Trading Wiz. All right, so let's very quickly get started with a very small introduction, guys. My name is Nirav. I'm the admin and owner of 50 Eyes Market Analysis YouTube channel as well as 50eyes.com website. And today we are conducting the weekly webinar series. We have been conducting them for a very long time. And right now the routine is we conduct 3 public webinars every month, and the last webinar is a private webinar. So far in the 154 public webinars which we have conducted, we have captured a total of 385 trades. And what happened with our in the last 153 webinars, we have captured a total of 385 trades. And what happened with the 154th webinar, we will also check out very quickly. Although I have to say a lot has changed since we last discussed, because we did a private one. So I think we will miss some points here. There will be certain gap, but that's bound to happen, right? And for those of you joining in for the first time, we do these webinars at 4:30 p.m. GMT and 10 p.m. IST. So just convert it to whatever time zone you are in. Moving forward, I'm also the author of this book. You can find more details for this. It is basically for intermediate to advanced traders, not for beginners. Think with the markets. And if you are a beginner, then beginner to intermediate level, we have a video course which is available via the website. You can check the details, and there's also a free version. You can check the details for it later on when the scrolling text appears at the bottom of the screen. So with that being said, yeah, there's one last thing. We do have a private Slack group for those interested in getting live updates, and you can find details for that using the contact us form and selecting the subject matter as group details. Lastly, you can check our past track record, which is above all industry standards and is heavily clear and well documented. I can say all details are here. You can just scroll through and check them, etc., etc. It's been quite a long time since I started doing all this and compile these track records and all. With that being said, let's now head over, and we already have the 154th here. So let's now start with the actual webinar. And of course, the way we will proceed is, first of all, we'll go over the charts of the past discussion, and then we'll check the live chart. Although, as I said, I'm not very sure how relevant it will be. So anyways, this is the chart of Euro USD, which was discussed last week, 13 days ago. As you can see, let's check the actual date here, 21st of February 2025. Again, keeping in mind our last webinar was private, there will be a lot of gaps here. So what were we discussing? We were discussing some possible long setup 1.05133 plus. So above that level, we were expecting upside, and I was assuming that what was I even assuming? So we have two counts. H1 is pointing up, H2 is pointing up, and there's an intermediate bearishness after the C. There's no. So it looks like we were pointing something up. I don't want to spend too much time in it, and let's just check the actual chart without wasting any time. Here on screen is a live chart of euro, and let's remove all the counts at once and go back to 21st February and see how things have proceeded from there on. Where is 21st? So market has seemingly remained in a kind of range, tested the range to the downside and then went up. So I don't know if this specific scenario was discussed where the market will expand the range to the downside or not. But what I do recall is we were able to capture some good moves on euro this week. So I will not rate it +1 or -1 or anything because I haven't checked what I said in the 21st webinar properly. We'll just move over to the live chart. For this part, I would say that just check the past thing yourselves. Probably I should have checked it beforehand, but I didn't have the time today. So here I'm assuming that we are progressing in some sort of impulse. Let's just check the point of reference first before proceeding with the count. Here is the point of reference for his for what looks like a five-way progression in the upward direction. And just 1 second, let's just check the hello Marco and Dawood Mohammed. Why it's follow? I don't know what that means. And Ativat is here, one of our private Slack group members, alongside Marco and Joe. Hello, how are you doing, Joe? Your response is still awaited. You gave me quite a message, concerning message last time. Hopefully everything is fine now. Anyways, hey Luis, one of our regular followers on YouTube. So thank you guys for letting me know everything is working, and good morning to you, Luis. And let's just good evening to you, Ativat. And let's now just proceed with our current discussion at hand. Let's check the Euro chart. What I'm assuming is that we have a five-way progression. I'll draw the rough count from this point of reference. We are assuming something like this in the upward direction. This is what you call an impulsive progression in Elliott Wave terminology. Is just a pattern of progression or pattern of price, which is denoted by 1, 2, 3, 4, and 5, basically numbering the whole structure. What I am doing here, let's just check. Okay, 1 second. All right, so here we have the first, let's call it a circle degree 1, then a circle degree 2, so on and so forth. And we want to now compare it with the price action on the left hand side or the actual data on screen. So you can see we have the 1 complete here, 2 already complete here as well, and 3 is assumed to be complete here, and we are then assuming that we have a 4th in play. Now what is happening here is that after the 3, the 4 will come into play. It could be zigzag, flat, triangle, complex, anything whatsoever. And so far it looks like it is possibly progressing as a maybe a flat structure. I cannot say anything with the extreme surety, and it's not really required here either. Whatever the case may be, if this count is correct, the move above the last high, which is around 1.08859, will lead to a what do you call bullish setup. That is, we would want to go long above this. You can also see I have already placed alerts above it. So the setup is really simple. We'll wait for breakout longs, and specific level I have is 1.08. I just want to read this, so let's remove it. 1.0894. So we can type it here as, that's the setup currently we have for this particular chart, right? Let me see if there are any alternate views, etc. Well, the only alternate view I can think of is that if the 4 is already complete here, then we can assume that the 5th is complete, because generally in the Elliott wave impulsive progression, the major theme or the main theme is that the 5 will take out the high of 3. Of course, in some instances it does not, but that's not very common. And as you can see here, the 3 high is already taken out. So that's the last idea I can have here. That is, the market is done here for the 5th, and it can give a bigger correction. Anyways, that's not really much of an issue. We don't really care for it as long as the market stays above 1.07635. As a matter of fact, I'll just move it up. We don't have to even wait till the end. Anywhere below 1.07785, the market goes and sustains, then it's a sign that this bullish setup will not play out. And lastly, if the bullish setup does not play out, the breakout does not happen to the upside, then it's not like we are having any negative trade here. So it's more or less an important setup. definitely something to keep in the watch list. And with that being said, I don't think there is anything to add here. I'll wait a few moments. If you have any doubts or questions, you can just push them in the live chat, and we'll take it. And also, I do have a current long position on euro with stop loss around 1.074. So we have taken even a little bit lower than the expected invalidation level, and I'm planning to hold this one over. Right. So that's it for our discussion on euro. I hope there is no doubt. If there is, I will take it once I see it on screen, because I don't see it yet. In that case, we'll just move over to our next chart. Next chart is crude oil. Also, do let me know in the comment section if I'm going too fast, slow, if you are understanding or not. Otherwise, no responses kind of dilutes the purpose of holding a live webinar. While we are at it, I already have euro open. Let's see what was the play so far. Added longs today. Booked profit on long. So there was a trade on March 4th. And there was a good scalp trade right after our last private webinars discussion as well. Hopefully some of you were able to catch it. There was another trade, I think. Yeah, there it is. Booked 60% profits on March 3rd. So euro has been giving us some good trades. 3 trades in the last 2 weeks, and looks like 2 have already been closed in plus. Yes. And the third one is running right now in. So far it's in plus, but nothing very major. So we'll just wait and watch on that counter. Rhythm is fine at the moment. I'm starting to get used to it. Well, that's good to know. Joe. All right, so let's now move over to our next chart of CL crude oil. Yeah, let's take a moment and check what was being said in our last public discussion on the chart of crude oil. Do keep in mind, those of you who are joining in for the first time, that we are conducting 3 public webinars and 1 private webinar. So last one was private, and hence there is a bit of a gap here. Last public webinar was on 21st Feb. But anyways, let's see what was being said here. We were assuming there's a range continuing with the bearish bias. The price at the time of discussion was roughly around 71.31. Some expectation of the market going to 70.68. That's all in the range, so nothing out of the ordinary. Anyways, we'll just take the marker 21st Feb price 71.31 and let's check the actual stuff. Thank you for the confirmation there. Right you at, and let's check the actual chart of crude oil. Let's remove everything and just check 21st Feb. There it is, and nothing really to say here. We were expecting bearishness 70.8 something, and below that further bearishness to continue, as we just checked in our last what do you call webinars recording, last public webinars recording, I should say. And so it has happened. So I'll just call the crude oil count as our +1 and marking our 386th trade, which has worked out in our public discussions. Now let's check what is happening right now on this chart. There are 2 possibilities here. One is the primary view I have is we don't have to discuss the whole thing. We just discuss it from here, from this point of reference. Let's change the color to something else. Let's say orange. So from this point of reference, we have Price level starting around 73.47. Expecting a C leg down in a zigzag. What I'm saying is that we have something like this going on. And from this point of reference, the C leg starts. We are talking about this leg. C leg generally is an impulse or a diagonal, or I mean, these are the two basic options C has. In this particular case, we are assuming that this C leg is a impulsive progression. Impulsive progression basically means it should look something like this. We already have that structure here marked out here as 1 and 2 and 3 and 4. Could be the 4 here as well, by the way. That was just a supposed expected diagram, nothing concrete. Anyway, so we are already here. The fourth is complete. So if we consider this was our secondary point of reference, let's call it POR number 2. Then we can assume that the fifth is continuing. If that is happening, then it will again itself be a diagonal or a impulse. Again, it doesn't even matter. We generally just want to see the direction first, and the direction is down in both cases. And the simplest possible way to play such a thing is to wait for breakdown shots, breakout shots. I mean, whatever specific term you want to use. Generally, you can say breakout for upside, breakdown for downside, but we can use the same term both sides, and you will know what it means, right? Anyways, that will be too late, and if we wait for the market to take out the wave 3 low, the target will also be small, the stop loss will also be big. So keeping all that in mind, I will probably look to add something in the middle, somewhere around 66.6, roughly speaking. And it's not a concrete setup. I will have to wait and watch how the market behaves and analyze it in much more detail. But the basic idea is that either it will go straight down. Secondary idea is that 4 is probably continuing sideways, and the range in this case will be this box. So within this box, the market can just go down, up, and down before going lower for the fifth. So the basically the possibility one is suggesting downside, H1 let's call it, and H2 is also suggesting downside. And there is a third possibility which is suggesting that the whole of the structure is already complete. That is to say that 3 is probably here, 4 is here, and 5 is here. Could it be the case? Of course, it could be the case. Anything could be the case. Anything goes. That's how things are. We are just discussing possible paths for the market. And probabilistically speaking, since everything is possible, we are calling this the H3. Why we are calling this the H3? Because I consider it least likely based on my understanding of market analysis and all of my experience. So based on that, we are considering it the lowest possibility scenario that this market will just go up from here. Right. So my bias remains bearish. Setup is very simple. In the middle somewhere, I can look for shorting, and last very conservative but low reward, high risk setup will be to wait for the breakdown, move below wave 3 low, which is 65.569, whatever. Just check the exact level on your chart. We are using this data feed, so your data feed will give us a little bit of a different price level, though it doesn't really matter or shouldn't really matter at all. With that being said, I will wait few moments if you guys have any doubts or questions. If not, just type in clear or understood or something. Good evening, Raghu, one of our private Slack group members. And if I don't see any questions, I'll just move over to the chart of gold. All right, Matthew and Joe, thank you for the confirmation, guys, as well as Raghu. There is no doubt here. So in that case, let's just not waste any time and move over to our next chart. Gold. Gold. Let's see what was being discussed on the chart of gold in our last public webinar. Again, those of you guys who missed it, we are now conducting only 3 public webinars, and the last webinar of the month is a private session. So here is a small gap. Last one is on 21st Feb. So perhaps things may not be very clear, but we'll make do with what we have now. So where is this? We are looking at some sort of flat structure. Whenever the C is complete, we look for upside move. That will be the main theme. Let's see if there is anything else. Not really. So here the setup is very simple. We can see small pullback and then up, and the second possibility will be straight up. So overall, it's a bullish setup on gold. At the time of discussion, the price was around 29.37. Let's now head over to our actual chart. And here on screen, we have the live chart of gold. Let's check the price data. 21st Feb. So we were expecting some pullback, but this market has gone a little bit deeper. Let's see what I'm considering it as. Yes. So the count was updated here in the private webinar. We have discussed it in detail. I think we would have, because we have taken some trades here on gold as well. So anyways, the things have changed a little bit. It did not really work out as we discussed. Kind of did. It kind of gave a pullback, but it went deeper than expected. And then the up move has not transpired yet. So it's a 50-50 kind of scenario here. So anyways, that requires our proper attention and detailed discussion of what's happening now. So what's happening now is we are assuming that we have some sort of circled 4 complete here, and probably circled 5 has started to rise up. So we can take this as our point of reference. Let's just change the color here. And from this point of reference around the price level of 28.32, we have what looks like a possible impulse in the upward direction. This is the counting we have. Actually, we can count it in a little bit of a simpler manner as well. You can just consider the whole thing as sort of one second, let me check that. Yeah, you can consider this as a 1 up, 2 down, 3 up, 4 down, and then a 5th up. And in a separately different way, we can also count it in yes, it can be. Anyways, the point is, if this is a 1 up and this is a sideways for 2, this could be a flat, and we already know what I'm going to say. We are expecting a price action within this range, and it is literally happening. That's how flats work. Flats are generally like this. Flat pattern, I mean, not the flats people live in. Of course. Anyways, stupid jokes aside, this is generally how flat pattern looks. So whenever the first leg forms, it gives us a upside and downside range. And generally we can draw a box around this downside and upside range and say that the market will most likely propagate within it. Sometimes it will break the range for a bit to the upside, sometimes to the downside, on some occasions, some rare occasions on both sides. But whenever the whole range is completed, or the price movement within the range or around the range is completed, the market then takes off. It goes straight up is the expected thing. So here also, again, nothing much to discuss here. It if is going as we expect it to go up. As you can see here, my alert line is also above the zone or the sideways zone. So I do not want to get trapped in a possible false up or false break and then move within it, within the range, and then the break. So because this can trigger my stop, or at least you know cause a situation where the risk is too big and I don't really want to continue the position. So I'll have to book a loss somewhere here only to see the market go up. Yes, knowing these things also sometimes may not have an impact, because at the end of the day you are trading an account, and account means money, and money means uh, first of all risk management, and secondly your emotions will also be attached. So what do you call practical knowledge and theoretical knowledge and applied knowledge have a lot of variance, and that's what I'm talking about here. So the wise thing here is to either build up small positions here, like take a very small positions for, if you want to go, let's say 10 lots long, then take one lot here and then maybe add more as the market rallies or however it performs. Second setup will be to wait for break and perhaps market to go about 29.40. Probably I should move it a little bit lower as well. 29.36 something or whatever, right? That's the bullish setup. There isn't much to discuss. If it breaks it, then it will just go up. There is a secondary view. I am considering the possibility that this whole thing is just a continuation of 4. It may remove everything, and it's very low probability scenario. In this case, the wave force sideways zone has already increased, may test it to the upside and then go back in. You know the whole drill. That's just a secondary idea I have in mind. So for that, there isn't much to say or do. The only thing is that if we consider this as 1 up, 2 down, then this downside range can be taken as our SL. And if something else happens, we'll just have to take out the loss or take out the position loss. With that being said, there isn't much to say or add here. It is in a range which is in a bigger range, or I can just simply say that market is currently inside the yellow range, which is inside the white range, right? So we have two ranges. So we have two upside markers. One is here at the price level of 2931. Another is here at 2956. So just keep those in mind and plan accordingly. As such, gold is looking less attractive right now for quick trades. I think we have better chances on Euro USD and CL or crude oil. With that being said, we are done here. If you guys have any doubts or questions, you can just push them in the live chat. If not, just let me know if you are understanding everything. If you have any other questions related to technical analysis, but outside a little bit of the scope of what we discussed, perhaps you can put it. We have a little bit of unclear situation here, anyways. There's a question here. Let's see what that is. Daniel Dharma has asked, how long could this correction take before breaking up? And secondly, do you think that there could be a big reversal down after this ends? Let me see. Well, here is a possibility if we consider this as a completion of some sort of 3, this as completion of some sort of 4. We can then say that this is more or less done here, and that all this is just the starting of a big leg down. That's just me projecting some outright bearish scenarios. Even if not, even if it's just lower degree one, it could still go lower. Right? Bearish scenarios are actually possible here. Here's the discussion we did, I think, in the private webinar in detail. I do not like to touch up on too much of the higher time frame counts in public webinars. They can get a little bit complicated, and 1 second, it's not visible, I think. So what I was saying was 3 is here, and we are assuming that we have a 4th complete here, and then we have what we will call impulse in the upward direction. Could be counted in multiple ways, but doesn't really matter. 1 up, 2 down, 3 up, 4 down, 5 up. You know the drill. And if the 5th is complete, it could have a big correction to the downside. Or even if it's a lower degree one, wave 2 can still give a deeper correction because it generally goes to 50-60% of the retracement. And 50-60 will be somewhere here, roughly speaking. So yes, bigger correction is possible on this chart. There is no doubt about it. And that's why I said it's not very pleasing to me at this point in time. Perhaps we'll get some more clarity as time goes by. But yes, good question there, Daniel. Hopefully that answers your query. Bearish possibility is possible here. Thank you, Joe, for the clarification. I don't see any comment from Daniel. So in that case, I'll just move forward. If there is any doubt, you can just post it in the live chat. All right, here it is. You're welcome, Daniel. Let's now head over to our next chart. And before that, of course, we should look at the discussion from our last webinar. So here on screen, we have the chart of S&P's 500 as was discussed in our last webinar. Let's see what was exactly being said in regards to this chart. And do keep in mind, if you guys are attending it, this webinar for the first time, or if you have missed one of the announcements that we are conducting 3 public webinars and 1 private webinar. So there is a bit of a gap here on what I said and what may have happened because we updated everything privately, of course. And the last one was conducted on last public webinar was conducted on 21st Feb. So let's see whatever I was saying back then in time. Yeah, we were expecting some pullback and then up move. I think that was all we were expecting. Yeah, there was another scenario suggesting one leg up and then down move. I think none of that happened. Although I'll have to check the live chart now because a lot has changed since then. A lot has changed actually. So we'll just remember the price 6082 and 21st Feb. And let's now head over to the live chart. Here you have on screen the live chart of S&P's 500. Here's a comment from Mikhail Kalashnikov. I tried joining a private group, but no response so far from your side and specific condition to follow. Well, you should have sent me an email. I would have responded with the details. And the details have all the conditions and rules. Did you not receive an email back? I generally do not get, may have to check the spam. Can you just tell me the date you sent me the contact us form inquiry? And I'll check back. It's highly unlikely that I did not respond, but if I have missed, just tell me the date and also just fill the form again while we are doing the webinar and let me know once you have. And I'll send you details. Anyways, getting back to our discussion, what we were saying was that things have not happened as we expected them to. Then just send me the inquiry again via the website. Contact us. That's highly unlikely. I'll have to check why that has happened. So 21st Feb, where is that? So what we were expecting was minor downside, maybe then upside. So we weren't really expecting anything below 5,900, maybe to 5860 something. But this is far from that reality or that expectation. So of course something has changed, and yes, I have to tell you that we were avoiding this chart for this very reason. I have expected this to fall basis on our long-term bearish count. Again, I'm not going to discuss it in too much detail. There is an alternate view to it as well, which is super bearish. Again, all that is already securely discussed in our private webinar, and I just want to give you a rough idea of the direction and important downside levels for now, because otherwise the discussion will get too extreme or too lengthy. So here is the bearish progression which I'm expecting on this counter of S&P's 500. We are expecting this point of reference 5097. We have seemingly diagonal formation, right? Again, keep in mind there is a super bearish scenario as well, and we will discuss it when the need arises, and I'll tell you when the need may arise or will arise possibly. First thing is that we are expecting that a diagonal is already complete. A diagonal is a five-way pattern where the 4 and 1 overlap. I'll just draw it on live price chart. So as you can see here, this is the fourth, and if we go back in time, it is overlapping with 1. So 4 and 1 overlap basically means we have a diagonal pattern, and if we draw the trend lines, they are diverging, so it's a diverging diagonal, or whatever, if you want to call it something else, that's fine as well. So anyways, the point is that once the market goes below it, you can not expect, we generally want to play a simpler setup, classic price action kind of setup, that the market goes below the trend line, it tests the trend line, and then we get a shorting opportunity here. And actually that may have even happened here if we zoom into it. This is daily chart, of course, keep in mind. So on some lower time frame, the market has gone below it and probably even tested it. But again, I'm not going too much detail, or not going into too much detail on that. Where is that? Here. So 1 up, 2 down, 3 up, 4 down, and 5 up. Yeah. Before we proceed with this, Michael, one thing that comes to mind, you should check your spam folder. That's possible that you just get it in the spam, or maybe it's in the promotion emails. If you are using Gmail, it's very likely that Gmail sends the email inside promotions or spam. I don't have any control of these things. So, as I said, generally my emails are always reverted. So, you will most likely have it in one of those two folders in your email. Right. Again, if you don't have it, just send me the inquiry again and I'll again send it. But then again, it will again end up in those folders. So, anyways, coming back to our discussion, the point here is the market is moving too fast. Our primary targets are here 56.19 and what is this, 5500. Let's just simplify it and call the range at 56.30, 5500. That is the general range we are expecting this price move to take support in. But given the strength of this move, I am finding this a little bit less likely, right? And in that case, oh, you found it. That's good. Anyways, so what I'm saying is, given the speed of this move, this looks less likely that it will take support here. So where is the second support coming in? It is coming here. I've already marked it here on chart. 53.20. Where is this? 53.24 to 52.50. So here is the second incoming support. Now, how to trade these kind of markets? Generally, the idea would have been that if this goes here, take support before this level and then gives this next level, testing the support, or probably the lower range of the support, right? However, given this strong leg, even the first leg itself is going in, so that generally means that it will probably test the second support. Not always, but that's just what we expect here. Now, the issue comes in if the market does not even hold the second support level, that is, if it sustains below 52.50, then it will invalidate our bullish setup, because for this market to hold a 1 up and 2 down, the wave 2 shall never go more than 99.99% of 1. So here the 1 starts here at 5095. So 5095 becomes your invalidation level. Right. So here the setup is very simple. We don't want to see the market sustain below 5250, and even that is not required. Below 5500 itself is a sign that something else is going on, probably. If it sustains below 5500, that's just a sign that probably it will break 50 to 50 and maybe even go to invalidation. Not necessarily go to invalidation, but at least go to the next support. So looking for short plays only here kind of scenario here right now. We know the support levels and all. As such, I am not in any trades on this market. I'll probably wait for some sort of pullback. And the reason I'm not in is because we were still holding our last bullish count, thinking of this as a possible diagonal, which may very well be the case. But then again, we don't have confirmation for it. And it kind of looks overstretched at this point. So for upside, let's get back on the chart. For upside, we have alert plays around 5857. This is not a go long kind of alert. It's just an alert to check what's going on the charts, right? Around this level, it could be just a pullback, waiting for a new leg down. Maybe it's a bullish setup. Both things are possible. So we just want to check what happens around the marked level of 5863, right? Wait and watch market, not very clear, a little bit complicated. So if you are not very professional with your Elliott Wave analysis and counting, probably avoid it for the time being. And definitely not the most bullish market. Avoid holding longs for longer period, I would say, if you are not in this market already. Nothing much to add here. If you have any doubts, questions, you can just put them in live chat before we move over to the last chart of BTC. And yes, guys, for those of you who join in these public webinars and do not necessarily want to join the private webinars and the private Slack group, I request that you kindly do your fair share by sharing this content with your friends, colleagues, and traders groups, so WhatsApp, Slack, Reddit, or Discord, or whatever you guys use to connect with your trading pals or groups, right? Keep in mind, we are doing these public webinars. Previously, there were 4, now there are 3. The idea is to always provide more value and not always for paid. We have always been conducting these public webinars, but you guys have made it terribly hard. Like the number of views has not crossed 1000 consistently at all. It really barely ever touches 1000. So I can only request, but as the time progresses, we will focus more and more on giving value to the private Slack group members, right? If you don't want that, if you still want to see the public content coming in, kindly do your part and share it as much as you can. That's my request. Again, I don't see any doubts or questions here. So let's now progress in the webinar with our last chart on screen now, BTC from our last recording. Let's see what was being said here. Again, keep in mind, guys, this if you have missed the past announcements, this last webinar 154 was connected on 21st Feb. The next one was connected privately, so there will be a little bit of gap. We did discuss the upcoming progression for BTC in our private webinar, and it has literally followed it. What I don't know is what we said in the public one before that. So let's see. Almost 2 weeks old now. So here it is. We are looking for some sort of bullish setup here. A up, B down, and I think that failed very nicely. And the invalidation was way below. Price was around 97927, let's say. Let's load up the live chart. Here on screen, we have the live chart of BTC now. Let's check 21st Feb. Yeah, so it, as I said, it failed terribly, and we have updated the whole thing later on. Let's see what's the update here. There it is. From this point of reference, we are assuming that we have a corrective structure in the downward direction, and I am assuming it as a complex kind of thing. I think we can even call it a W here. Let's just take it from here. X here as a triangle. And possibly a Y here. So that's just the main theme or the main idea we have. Now, the second thing that comes to mind is what is the market doing afterwards? So there are 2 things it can do. It can just go up straight from here. And also WXYs are known to, propagate as WXYXZ. So it could just, form another X here and then another Z or last leg down. So the possibility of further bearishness does continue here. We don't have any, what do you call, real sign of bullish strength here. The possibility of downside remains likely as much as the possibility of upside remains likely. Only thing I can say is that if we see market move above the level of whatever this is 9928 99414 actually, let's say 99,400 above this level, I will consider the possibility of bullish continuation more seriously than the bearish one, or we can say that the bias shifts to bullishness above it. It's not a long trade setup, it's just that the bias shifts and can lead to some possibly long trade setup, right? So with that being said, I think BTC is a wait and watch kind of market. You can at the same time also place an alert on the downside around 80,000 something. And if the market goes below it, then we can also say that the bias shifts bearish, or actually in this point in time, we can, if this really happens at any point in time, we can actually look for scalp shots as a matter of fact. So wait and watch market upside setup is complete wait and watch, and bearish side setup we do have a clear, you know, breakdown and take a trade kind of setup here. Nothing much to add here. With that being said, I think we are done with our all the charts, and thank you to all the guys who stayed with us till the end, and hopefully you guys share the content and help us reach the right audience and more relevant views. Let me know how was your experience with this webinar, how was the pace, and of course if you have any doubts or questions on the last chart, I'll still stay here for a few moments. If you have it, just push them in the live chat. That's good to hear, Luis. And hopefully, you are also one of the persons who is sharing our content. Same goes for everyone else here, Raghu, Michael, and Ativat, Joe, and the rest of the people who are viewing the content later on. Hopefully, you guys share it and we can continue doing these webinars more often. Hey, you're welcome, Raghu. Thank you for the nice comment. Welcome, Audrey. Thank you for the nice comment, Joe. Well, I think we don't have any questions here, and thank you for staying till the end, guys. I'll put an end to this webinar here, and I'll see you guys in the next one. Take care.